Welcome, everybody, to From the Research Chair. It's a Focus Consulting Group podcast. My co-host, as you probably know by now, is Michael Falk. I'm Jason Voss. Thank you for joining us today. We're going to be discussing this hour one of my very favorite topics, one I've spent many years discussing or researching and sharing little tidbits here and there because it's such, I think, a value-add topic, namely management interview techniques. To start us off, actually, before I say start us off, I implore you, subscribe to our YouTube channel if you can't always make these. I think we have so far about 40 subscribers. We have a little over 200 views, and share with colleagues as well. We would love to see that. We'd like to grow this, of course. Michael and I love to share this material. We have such a passion for investing. In any case, to start us off today on the subject of management interviewing techniques, Michael, you've been in this business a little longer than I have, not much longer. How is it normally done at most firms when fundamental analysts sit down with the management teams of businesses they want to invest in? What's going on there usually?
Well, sadly, the interviewer it starts off with a stock list of questions, right? Ever since Reg FD appeared on the scene, the stock list of questions and or the deeper list of disclosures that inevitably come out in some way, there's no more unique content to any given analyst. Number one, very, very difficult historically, possible but difficult. Good interviewers could get it. Then Reg FD comes in, and now, at least in the US, I want to be specific about this. Reg FD, fair disclosure about how companies need to and must disclose their financials and other details to potential or existing investors. Classic interview techniques, Jason, by and large, do not add any value in my opinion.
And would you characterize that as because you named gifted interviewer? Is that because you think that for most firms that are doing it, if they're doing it and extracting value, it's because it's an art for that individual? Or like, what do you attribute that to?
I think it's part art, but it's also, let's give a little credit to the other side of the desk. The CEOs, CFOs, folks, these people are trained as well. They're quite good in terms of speaking in front of others. And why do you think you could crack someone who's a trained presenter if you're not, number one, or if you're not uniquely skilled?
It's a great answer. And in my experience, it's typically that as well. I would add, most firms it's ad hoc at best, right? So when we're hiring folks like research analysts at a firm, we'll ask for an example of a spreadsheet or a model that they've built, and we'll examine that and we'll ask questions in the interviewing questions about those skills. You go to grad school or you study a CFA program or some other financial credential, there's no material on how to conduct the interviews of management. But that doesn't mean that there isn't technique that can be brought to it. So I would, just to summarize, I think what's missing is technique. Even given what you said, Michael, that the other side is trained, in some ways you can actually take advantage of that, which some of the techniques I'll be sharing with folks later in our presentation here, our podcast, are designed to sort of penetrate those defenses. You were going to say something.
Well, there's a really interesting parallel. We're talking CFA and investment interviews. Let me take it into a corollary line of work, private wealth. CFPs have to interview and talk to their clients and find out their hopes and dreams and their assets. I used to teach for over a decade in the CFP program, apart from my CFA work. And it's so interesting. They teach all of the details of what you need to know to be a good practitioner. There is no bedside manner or interview course that needs to be passed.
Yeah, this speaks to the problem, but might I also suggest, it suggests a gigantic opportunity for those who bring technique to this process. And there's some good news here. But before I get on to the good news, let me disavow of one belief you may hold. When I have seen structure brought to this process, it is universally somebody who has taken some sort of pop psychology lie detection course And there are a couple out there. I won't name names. One of them does charge $25,000 though for a 4-hour workshop, and they promulgate a pan-cultural fiction, which is that you can extract meaning out of people's body language that's indicative of truth or lies. Oh,
So
yeah.
you mean if I talk like this, I'm probably lying in some way if I'm touching my face too often? Well,
Yeah,
Jason, come on.
exactly. So since 1958, this has actually been tested by social psychologists, and it's actually one of the most widely tested things. It's been tested well over 400 times since 1958, and there has never been a study that has advanced and proven that body language works as indicative of lies or truth, first of all. There's one researcher, Paul Ekman, who is world famous for this. And in fact, TV series have been based upon his work. However, people cannot replicate his results. And by the way, I'll say it's not that body language is not necessarily indicative of behavior, it's that it's not indicative of lying. There is a distinction. And I'll just give you a simple hypothetical.
Well, that bears repeating, Jason. Repeat that again because people will, that is a very specific thing they need to hear, I believe.
Yeah, it's not that body language isn't indicative of behavior. It's that it's not necessarily indicative of lying. And here's an example that I think illustrates that. If you are being interrogated in a police station and you are innocent, do you have a reason to be nervous and anxious? Absolutely, you do, as does the person who potentially has committed the crime. And so if the body language is indicating anxiety, which in fact people can in fact sense anxiety, it's not necessarily indicative of lies. For example, and more to the point, most of us, I hope on this call, on this podcast, have not committed felonious crimes for which they needed police questioning. But we've been in job interviews before and we're anxious. That doesn't necessarily mean we're lying. And so our body language might indicate that we're anxious. That's not necessarily indicative of lying. So what does work is the natural next question. Michael, I know you know a little bit about this. Do you have any sense of what works?
Well, I may not, but let me just challenge all of you, not right now, but at a later date. Watch some piece of news or an interview specifically. Watch the video with no sound, then watch it again with the sound and no video. And you can flip-flop the order, by the way. You teach yourself what you pick up differently and what different reaction you have to the material that you heard during the interview. It makes a difference.
It absolutely does. And you actually highlight one of the things that does work. Vocal intonation is something that is indicative of truths or lies. And by the way, this conversation isn't just about truths or lies, but it is a fascinating thing. I neglected to mention a little bit of data. A large meta-analysis was done, I think in 2010, if memory serves, and they looked at the body of literature since 1958 on lie detection by body language. If you're not familiar with meta-analysis or analyses, it's a study of studies, and they apply criteria to make sure that as they aggregate the results from multiple studies, they can draw overarching results and conclusions. And when they do that, they apply rigorous statistical criteria to make sure that the apples to apples criterion is satisfied. So in this instance, they used 206 studies that met their study, over 25,000 individuals whose ability to detect lies and truth were put to the study. The overall net accuracy rate was 54%. So just 4% better than 50-50.
That sounds like a coin toss.
It is a coin toss, and here's the thing. That 54% is an aggregated result. People were 47% likely to detect a lie, 61% of truths. Said another way, most of us have a truth bias that's fairly strong, right? So essentially a 20% truth bias. When I was at CFA Institute, which some of you know me from my prior world, I conducted with criminal justice professionals histories first research into lie detection success among finance pros. And what we found is that in domain, meaning within a finance setting itself, the accuracy rate was actually lower than it is in the Gen Pop. It was just 51.8%, but right around 50-50. and we found that the overall lie detection accuracy was 49.4%. So right on 50-50. So said another way, we're guessing. And sadly, we found the exact same truth bias that was approximately 60%. So this is going to play into some of the recommendations here at the end of the call in terms of how to do this better. But the first tip is you need to bring structure to your management interviews, and not just a stock list of questions that you ask everybody, but you have to be thoughtful and prepare for each individual interaction with management. And one of the reasons you need to do this is companies themselves have their own narratives and their own stories, which if you're an analyst or PM or CIO, whatever your role is, that you're already familiar with. And then to Michael's point about the fact that the CEO, the CFO, COO, though that role's not really in many firms any longer, they're well trained. And not only are they well trained presenters, Michael, you didn't mention, they are also used to the same suite of 25 to 30 questions, which they rehearse. I have friends who are investor relations pros, and they say that, for quarterly earnings or major presentations at the iBanks, that they prepare their answers, and they study and practice to be a good witness. Michael, I'll pause. I've said a lot. I bet you have some thoughts.
Well, what I've always found so incredibly interesting is people that are in the investment industry want to build models to understand the potential for cash flow variances into the future. Strategy, folks. When you interview management, what do you learn about their corporate strategy? And I don't mean just listening to the storylines. I say I want to track their execution on their strategy over time, right? So show me your corporate strategy from 3 to 5 years ago, and I can see what you executed on or not. And then I can then build a confidence level in how I'm going to model my expected future based upon how consistently do you actually execute on your strategy. I'm going away from the numbers, folks. I want to compare what they say with what they do, and I want to track that because that is factual.
Yeah, great point. And another thing to evaluate in management interviews, and I'm sure this is not news or a secret to anybody, but I'll emphasize it because it is important. Behavior, we all know how hard it is to change a habit, right? Each of us on this call have probably at various times tried to cut back on coffee, exercise more, meditate. I know some of you on the call are erstwhile meditators. It's tough to start a new habit. And said another way, behavior tends to be consistent. And ergo, if you understand the behavior of management, it tends to be predictive of outcomes as well. So that is one of the tips, is to pay attention to the behavior and ask questions that are associated with behavior to begin to suss some of that out. Now, when I talk about structuring interviews, I've highlighted several problems. One of the problems is there tends to be a lack of structure. And if there is structure, it's repeated questions. So that suggests a different kind of a structure. Okay, we've got that. The other thing, because they are skilled at answering the questions, it also suggests we have to ask questions that they don't expect, that they're not prepared for. It is possible, difficult, but possible with practice to ask questions, get answers from people, and the executives don't know that they have actually revealed information to you that is not of a public nature. And this skirts the line. They don't know that it's not public, but the answer to the question answers affirmatively something that you have not heard from the firm. And it's not in violation of Reg FD because they know the information they can disclose or not, but the way you've asked the question, you can infer what the truth is. So I'll get to some of those techniques in just a second. So what are techniques that do work? One is a technique called the cognitive load technique. And here the success rate of CLT, as it's known, is around high 60%. So not amazing, not great, but the technique here is if there's a pertinent problem or question that you have for management, rather than just asking them the direct question, how is Southeast Asian printer sale? How are Southeast Asian printer sales going? Or what are printer ink sales there? and how was it in a quarter, which is the direct question, you need to follow up with multiple questions about that and change up the order. Liars have a hard time taking things out of sequence. Said another way, they prepare typically and rehearse in a way an answer that is plausible and in a sequence, which makes sense. When we prepare for a presentation, when we prepared for our work here, sharing this in the podcast today, we have a sequence. A truth teller has no problem reversing the order because they're fluent. A liar has a really hard time. So if you increase the cognitive load, yes, the same question backwards, you can begin to see inconsistencies, and those inconsistencies are evidence of mistruth or indicative of something that may be worth exploring because they are telling the truth, but it's a little bit uncertain for them, which in itself is information. Michael.
Yeah, and that last point, Jason, I think is really important for people to dive a little deeper on. When people are lying, okay, they may be lying because there's bad news or there's good news that's not yet known or they can't yet share. To the extent they're lying, they may be sandbagging, right? We don't know why they are not telling the truth. Keep that in mind. And that's where the additional questions are so critical, because it gives you the chance to explore where the direction is that maybe they're hiding or sheltering some level of information that could be of use to you.
Yeah, and what are the ways you can execute the cognitive load technique besides asking, right? Typically, the question is answered in a chronological way. So they'll say, well, the beginning of the quarter, printer sales were doing fairly well, and then there's a little bit of a dip in the middle, and then we recovered in the third portion of that. So one way to bust that up is to ask, a question that's a little bit less obvious. How was it toward the end of the quarter? And then you can ask the beginning of the quarter. And then, and this is the additional add here, later on in the interview, you can return to that when they sort of least expect it. And you can ask almost the same question again, but it's out of sequence. And you could say, what was that? Can you remind me what it was, the second portion of the quarter? How are the sales in the middle month? And check to see that the answer is the same. And liars have a really hard time with that because they're used to a sequential answer from A to F, if you will. Michael, it looked like you were going to say something. I saw you nod.
Well, I'm just so appreciative of tricky, right? Because reversing, changing the order, referring back to a prior question. Anytime you break a narrative, because that's what we're really talking about. How do you break a narrative? And you say, well, they're my questions. How is it a narrative? Because they know your questions, because they get the same questions from most people. Anytime you break a narrative poses an interesting challenge, which may show more information content to you.
Yeah. The next tip, and this is a general tip, and I'll get to actual techniques on the lie detection bit, but understand I'll be a little bit oblique about them because they're so valuable. We would love to have you hire us as consultants so we can teach you these techniques because they're so high value add, but nonetheless, I will give some hints and techniques that you can use for lie detection that help. But the next piece on structuring is, and you've heard this before, ask open-ended questions. And this seems very obvious, but frequently people, when you ask an open-ended question, most people, when they answer, don't answer directly. They answer indirectly because they're thinking spontaneously about the answer to the question. And so,
or they're avoiding answering it directly, which happens too.
Exactly. And so at the end of your interview with management, if you're asking open-ended questions, there is a narrative that took place there that involves two things: the answers to your questions directly, where your direct questions got answered, as well as the other content that they volunteered without you asking for it. Only at the end, and when reviewed in totality, can you begin to piece together some of these things. And only open-ended questions really allow for that, seeing the dark matter, if you will, of what transpired in the conversation.
Now, and by open-ended question, just listen, you know this stuff, but hey, tell me about what do you think happened when? These types of questions, avoid yes, no, avoid agree, disagree, avoid that type of situation. give them the opportunity to actually furnish you with a narrative
Yeah,
and then pull it apart.
yeah, exactly. And the tip here is open-ended questions, but the real value add, and you may not have heard before, is review at the end what was said that was not asked and see if there's content there. That can be a very valuable tip. So that naturally suggests the next tip I have for you. And Michael, I know you can speak to this. Have a second person on your interviews with management. It's critical, and have defined responsibilities for that conversation. And my suggestion is one person is in charge of the agenda and the questions list. Another person is listening for what's taking place in the interview and for the subtext, as well as the information that's mentioned, that is in that category of dark matter that I described before. And then when you review at the end, it's very interesting to compare notes. And Michael, I know that this is something that you and I have come to appreciate in our work together.
Yeah, yeah. Two people in this example who have different cognitive profiles, who come up with independent questions, who balance to some extent, and it doesn't have to be 50-50. As Jason said, one is in charge of the agenda. You don't want two people driving. And then after, compare, what did you hear? Here's what I heard amongst the two people. This is so effective to get more information content because of the independence, the diverse cognitive profiles, but a very simple aggregation technique after the interview when you debrief together.
Yeah, and then the next tip for these two people, what are you doing? You know, what is the activity of the person who is quote unquote listening? Well, they're not just listening; they're also watching. But you're not just listening for the form of their answers. The form would be the data that they quote to you about any given issue. The substance of it is what's mentioned. And I'll give you an example. So in the early part of my career, I went to an event called the Oklahoma Independence Forum, which was the six big independent oil and natural gas firms that were Oklahoma based, talking about their companies. This is like circa 1998. And Apache had if anybody knows Apache, they know that the founder was a looming figure with that organization. And in fact, at this event, he was the chairman emeritus, and there was a CEO who had been named within the last 18 months. And he's sitting up on there, the chairman emeritus, a pipe. Like, when was the last time you saw somebody smoking at an industry event and like literally blowing the smoke out into the audience? And every time the CEO would say something, the chairman would add his bits, and mostly what his added bits were contradiction to the CEO. So the form of that is the content of what the chairman emeritus said about Apache, but the content, the substance of it is he's 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 more than the chairman emeritus. He's still the CEO. Don't fool yourself. So be watching for behavioral cues that are taking place within the interview setting, because I guess it all goes down to a theory of mine, which is everything is evidence. Pay attention to more of the evidence because there's a lot of content there. Michael.
Yeah, and listen for just how much each person is speaking, right? When somebody is speaking for 80% or more as an example of the Q&A, and the other person is de minimis, start to wonder why. If the two are diverse, I don't mean cognitive, I mean the classic sense, man, woman, American, non-American, whatever diversity language you're comfortable with, I don't wish to offend. If they're the diverse, how balanced are they in their responses? Get a sense for how the organization functions beyond just the questions you're looking, because there's information content there.
Yeah, and I'll give you another example from that same Oklahoma Independence Forum that was huge. We ended up being the largest shareholder. Actually, we were at that time already the largest shareholder for Devon Energy. Some of you on the podcast may be familiar with Devon, ticker DVN. And we owned, I think, a little over 5% of the firm. And one of the things that struck me in listening to Devin answer questions is that they had 9 people on stage. First of all, that's rare. Most firms do have the CEO or the CFO, one or the other, or both, but not 9. But what was crazy interesting is that questions were coming from the audience, from the mic. Devin, they didn't have to direct the question to somebody. They didn't have like the IR guy say, hey, you know, Bob, would you take that question? The person at Devin responsible for that information, even though the question was kind of obscure, started answering without being prompted. They didn't need a moderator. And that said everything about how well managed they were and that responsibilities were clearly delineated. So this is another technique. In the interest of
But hold
time.
on. Think about that example, though, for quickly. It has nothing to do with a number in a financial statement. That has to do with organization and quality of people and how they work together. There's so much that's out there that seems to go unobserved. Jason.
Yeah, sure. The next thing, and now we're switching into stuff you probably have not heard before. Some of this is made the rounds over the years, and you may have discovered these as best practices already on your own. First, you have to assume that you're being lied to. That doesn't mean you have to be hostile toward the person, but given our truth bias, the only way to undo the truth bias that's statistically significant for our industry, you have to assume that they have incentives, as you know, to manipulate the information so that you become an investor in the firm. So that's the next tip. The second is listen for a special type of response or reaction from them called protest statements. Protest statements are defenses of things offered up when no attack was lobbed or rendered on your part. I'll give you an example. One might be you come home, I'm going to put it at the personal level because each of us has experienced this. If you have kids, you come home and you see cookie crumbs by the cookie jar, and your kid says, I didn't have any, you told me not to eat any sweets. I haven't. And you haven't asked anything about the cookies, but you absolutely know that they probably were in the cookies because they're volunteering a protest statement. There was an office prank at CFA Institute where somebody had put these little wireless devices and hid them around the office, which would beep every once in a while, like a smoke alarm beeping when the battery's going low. And nobody could figure out who it was. Yours truly figured out who it was because of a protest statement. This guy, whose name shall not be uttered on this, when I was coming around and applying the lie detection techniques as an exercise in fun, he said, "Just so you know, it wasn't me who put up the devices." I said, "Well, that's interesting." And blank. How do you know why I came by? A, and B, I didn't ask anything about that. I would put good money on the fact that you did do that. And in fact, he confessed right there. So that's another technique.
Truth is brief.
Yep.
Line is long. Never forget.
Yeah, exactly. The next thing is listen for the answer length. Liars have very brief, not very detailed answers because they tend to be rehearsed. So if there's an especially important issue for you to explore, you want to see if you can get great depth in the answer. So for example, with my example of printer ink, Southeast Asian printer ink sales, we'll imagine Hewlett Packard or Epson as somebody else being the company. If that's especially important to me and my modeling or my investment, I would prepare a number of questions there and look for the depth of the answer and whether or not they can actually deliver the goods there. So that's another thing. And this is statistically proven by the scientific literature. Liars have very short answers.
Well, that's interesting, Jason. That's the actual opposite of what I thought. Don't liars want to bring you into a web of a narrative so that it's more believable?
No, and we'll get to that in just a second. You're gonna love it when we get to one of the technique that scores the highest at 85% success.
No, our guests are going to love it.
Yes, our guests are gonna love it. So the next thing, and this is the last sort of freebie tip, and then I'm going to switch to informative but oblique, form less than substance. And I apologize, but of course this is valuable and we're not going to give away the milk for free. We'd rather that you rent the cow. And this is develop questions that are kind of like billion-dollar questions. I'll share one from my own career, which was, what does Wall Street frequently misunderstand about your business? And that is a special type of a question, which I'll discuss here in just a moment, that I think is unique to me. I've developed it. I have not put it to scientific scrutiny, but nonetheless, it's a technique that works. And the answer to that question always was interesting, because essentially what I'm asking is, what have I left out? And that turned out to be a critical question that I asked of many firms over the years, and most firms didn't know and interpret the question properly to know what I was asking for there. Michael, do you have any questions like that? I bet you do.
Well, I did, and because of some of my background work before joining Focus Consulting, you got a bunch of you may have to hire other managers. You're an endowment, you're a foundation, you're a pension fund, as an example. So this, what Jason's talking about, you can think of it at the security level. You can also think about it at the manager level. With the managers, I used to say, tell me about your most successful investment and whether or not you could ever repeat that once again. Think of it like the Olympic judging, right? They throw out the high scores and the low scores. What happens to an asset manager if you throw out their best investment or their highest year and their lowest year? How more normal, typical do the return streams become? My point here is that's a difficult question for them to answer. It's a horrible question for them to tolerate. So if you want to torture, this is a way to do it.
So thank you for that. That plus what I've just said, what aspects of your business does Wall Street frequently misunderstand, segues into a technique that I developed and is something that we have created a consulting product out of at Focus, called Indirect Context Questions, or IC, as in I see something I didn't before. And the nature of that question, I'll be brief and, as I said, a little bit oblique about it. The standard question format is to ask the question in a direct form based on the answer you need to get. What were, Southeast Asian printer sales would be a direct form of a question. The effect is you get a very generic answer to a very generic question. So indirect context questions actually flip your preparation from asking causal questions and instead asking questions about the effects you would want to see. That is, questions about the evidence, and then infer from the evidence the substance of what's going on. Let me give you an example. Again, I'll use Devon Energy because it's a classic example. It's one I published. It's in the Intuitive Investor, my book, so there's no harm in disclosing it. Devon, for those of you familiar with the company, there was a narrative that had developed that Devon was an empire builder. There was a narrative on Wall Street also that anybody who was in the oil and natural gas business whose debt to equity ratio was higher than 40% was a crook, because they're using leverage to drive earnings. So Devon,
those were the days, 40%. Oh my.
So Devon, in rapid succession, had done 2 acquisitions and driven the debt to around 70, 80%, if memory serves. And the stock massively sold off. And you have to know part of the narrative. Larry Nichols, the CEO, very bright guy, always was the smartest person in the room, in my opinion. He was the son of the founder of the firm. And so the narrative that was developing is, oh, Larry wants to outshine his father's success over time. So that was what was hanging over the stock. So I was headed to New Orleans to the Howard Weil Energy Conference, whenever that was, 99, 2000, don't remember. And I needed an answer to the question, are they empire builders? Because if so, they're managing the business for the benefit and glorification of ego, or perhaps to exercise stock options rather than me as a shareholder and my end client. So the normal way to ask that question would be, Larry, are you an empire builder? And Larry's no idiot. Larry heard that question. It was on a quarterly earnings call. I heard it at another conference. Guess what? Larry's skilled at answering that. Guess what? So is the investor relations person. So is everybody associated with that company. So using the indirect context method, I thought about and got creative about what would be the effects? What would be the things that I would expect to see other than high debt to equity ratio that would be indicative of empire building? how do I break the context of the question? So here's what I did. I waited till the end of the evening at the Howard Weil Energy Conference. For those of you who attended that conference, they had this really nice thing where you could have dinner with the CEOs of these businesses, and they would have tables of 9 to 10 folks, and you could, sit at the table with the execs. And because we were their largest shareholder, I had some, was given that I would get the reservation. So I waited till cocktails were on the table and we were talking about golf handicaps and things like that. And the context at that point is reminiscing and, nostalgia a little bit, right? We're talking about kids, family. And I said, Larry, 10 years ago, did you guys ever think that you would be here? He said, absolutely not. He said, it has been a crazy ride. And he said, I'd like to think that we've taken advantage of the opportunities as they have been dealt to us. That is the answer to the question whether he's an empire builder. No, because the context was totally different. The context wasn't now, the context was before. And then nonetheless, though, the evidence, the effect after that causal question was radically different. And so I could be confident of the answer. And in fact, Devon sold off non-performing assets and got their debt to equity ratio down within 9 months back to around high 30s. Anyway, that's a technique that works. In the interest of time, I got to move on. That's a house developed one. That's proprietary to us. The following I'm about to talk have been scientifically demonstrated and evaluated. Next one is one called controlled cognitive engagement. If you've gone through international customs in the last 3 or 4 years, you have been subjected to this because most of the major airports and security professionals are using it. And you may notice a totally different change in those interviews than previously. And there are 3 phases, even though the conversation with you is sometimes less than a minute. The first is rapport building. How are you doing today? By the way, this technique works for the longer interviews with management. Build rapport first, ask about kids, ask about golf, put them at ease. And then an information gathering phase, and then an unexpected question. And that unexpected question is meant to trigger the cognitive load and then to check veracity based on the short information gathering that has taken place. That technique is, again, high 60% accurate. It's been tested multiple times and in domain. They've actually tested security professionals where they had mock terrorists go through the security line and they were able to snag them 70% of the time, despite the fact that there were thousands and thousands and thousands of people going through these security checkpoints. So that's one that works. And again, you're looking for inconsistencies, changes in behavior. There's literature on it. You could go find it if you want to. The next is content and context. There, the success rate is 78%. And content and context can be taught within about 2 hours. And it actually has a structured list of questions. I will give you the question that is statistically the most significant from the question list, and it is really good at uncovering liars. And that question is, if I were to ask somebody else at the organization about this issue, what would they say? And so that goes a long way to understanding whether or not there's a shared narrative about something. Facts tend to have shared narratives because the facts are widely disseminated and there's fluency. So the only way to get the content from that question to be valid, you have to talk to multiple people at a company. This, by the way, is another interviewing technique. Try to have a separate interview with the CFO, one with the CEO, one with IR about the same information. Typically, we try for efficiency to get everybody in the same room at the same time. You don't want to do that. You want to look for inconsistencies in the story as well as additional.
Yeah, think prisoner's dilemma, folks. Split them up, put them in different rooms, and find out the truth.
Exactly. 2 final techniques. One is strategic use of evidence. This is the one that's 85% successful. I won't say much about this. This is like the real gold or platinum, or choose your metal. Palladium I saw is like soaring right now. Choose your precious metal. It's the real gold of the call or of the podcast. Strategic use of evidence was pioneered about 10 years ago. And it is very different way of asking questions than typically is taught. Another way that I've seen this done at firms, if they have structure, is they've studied interrogation techniques. In classic interrogation techniques, you hit people with your strongest evidence that they may be telling a fib up front. That's supposed to be something that triggers anxiety in them and gets them uncomfortable And then when they're nervous, they'll start to have their tells come out, and you monitor the body language. And if you watch most crime dramas, like Endeavor, my mom's on the call, she and I watch Endeavor. That's exactly how they do the interrogation techniques. They do it on Vera as well. They hit them with the evidence up front, and they're sitting there monitoring the behavior. It doesn't work. And it doesn't work because you've told the liar exactly what they have to explain away in order to be exonerated. And in all likelihood, they prepared for that anyway, and you've given away your best evidence. Strategic use of evidence relies upon a theory, and it's a very different theory. And here are the 2 points to the theory. Part of theory 1, liars and truth tellers both want you to believe them. Oh, gee, that's radical. Wow, Jason, that's shocking. Two, the strategies for doing it are radically different. And this will be the last thing I say about this technique, because how to elicit what I'm about to describe is why Michael and I make bigger dollars than a freebie podcast. Liars will try and avoid like mad the narrative or line of questioning that might suggest that they are lying. And said another way, be strategic with your evidence and how you utilize it. Truth tellers, on the other hand, when confronted with a line of questioning and they get the gist of it, will go out of their way to point you to the evidence that will exonerate them. So if you notice the inconsistencies between those behaviors, that's the technique when taught well, it takes about 4 hours to teach it, bumps you up from 54% to 85%. The last thing I'm going to talk to you about, one, I'm quite proud of it, something that I've developed, but I'm not the creator or the, what's the right word? I'm not the, I did not plant the seed. I am, however, I think picking interesting fruit off of this tree. Text-based.
He's fertilized.
Yes, exactly. Text-based analyses also work for sussing out lots and lots of interesting information, including behavioral information. So you can, using text-based analysis, know the gender of a speaker. You can know their personality type, like Myers-Briggs, with high levels of accuracy. You can detect who is the leader even when names are separated from a conversation. Most importantly, you can also detect deception with high degrees of accuracy. Normally, the standard that's been quoted out there are individual algorithms, which the highest reported is 72% accurate. Yours truly has developed a combination of algorithms and identified the parts of the text that work. And Michael, you know about these results. I looked at the Dow components going back 11 years, and I created an equal weight portfolio for those 30 names, just advance it forward. And then using the algorithms, I scored each of them based on deceptiveness versus truthfulness. And I just didn't buy the top 5 most deceptive firms. And that outperformed in 9 of 11 years. It outperformed in every 3-year rolling period, every 5-year rolling period. The level of outperformance was 9.55% in total and 84 basis points per year.
So Jason, should we brand this, instead of the dogs of the Dow, as the deceptions of the Dow?
You know that we have a name. The name that we've given it is Deception and Truth Analysis, or DATA. And it is a product that we have not quite rolled out. We just got permission to license the text-based analysis software under it. The algorithms are really the value add, though. I also have applied it in 2 other interesting domains. I took every one of the 10 largest corporate scandals in history and applied the algorithms to the scandals. And in every case, it identified the scandal companies, and with an average lead time of 4 years. Probably the most interesting case there was AIG. And the reason AIG was interesting is because the SEC brought an enforcement action against AIG in 2001, but they said it was in 1998 that the scandal had taken place. And in fact, the algorithm showed exactly that. They showed AIG truthful, 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 deceptive, and then they returned to truthfulness. And by the time the SEC brought its action, they brought it for the 3-year prior period, and that was exactly what the text-based analysis detected. And then finally, some of you may be familiar with Wirecard and the Wirecard scandal. I used Wirecard only has 3 publicly disclosed documents about its performance, but it immediately registered as one of the most deceptive companies I've ever examined. So it also was sensitive to Wirecard being a liar. Interestingly, that was first quarter 2019. Second quarter 2019, it actually showed a huge dip in their deceptiveness. Third quarter 2019, a huge elevation in deceptiveness again. I will pause there for questions. I have exhausted the possibilities probably.
Yeah, and folks, if you're wondering why my friend and colleague Jason has led most of this dialogue, is because he has done this research. Now, when I say he has done this research, I don't mean by he's read a few articles about this. I mean, he's done the research and he's been doing primary research. You all know the definition of that on this data topic that he just shared. When you can go ahead and understand a level of confidence and truthfulness in terms of publicly released documents, and you can suss out those that are more or less. Listen, we never know what the future holds, but you have a choice of where to put your money. Why put it in those that are less? And the data, or rather the result from data, because that's the name of it, Deceptions of the Dow. All right, the results are ridiculous in terms of the advance notice that something is going on here. And either A, right, it doesn't tell you it's a fraud. It doesn't tell you they're lying. Something is going on here that does not appear to be truthful. You have a choice. You can dig deeper, so maybe it will highlight where you need to spend more time, or just avoid it, because there's a lot of places you can put your money. With that said, we've been going for about 50 minutes. Questions, please. If you have any questions, let's ask them, because at the top of the hour, Jason and I do have to disconnect to go to an actual client engagement. Virtual, when I say go.
Yeah, and use the chat function or take your microphone off mute, and we'd love to hear the questions.
And if you come off mute, please raise your hand so we'll call on you then. Well, that, again, you'd have to show yourself. If you don't want to do that, then you have to just shout into the morass, you know, the group that's here. All right, we have a question.
Alam asks, can I recommend any good books? Indeed, I can. I'll give you a name. Aldrit, Aldrit, Vrij. V is in Victor, R-I-J. He is one of the researchers, probably a handful, 5 to 6 researchers globally specializing in lie detection work that works, as opposed to the body language stuff, which definitively does not. Another one is Bella DePaulo. Her stuff is long out of print, and she focuses more on the data of what doesn't work rather than disclosing and developing techniques that do. And those are really the 2 rock solid books, strongly grounded in decades of science rather than pop psychology.
Thank you for the question, Alam. Others. Now keep in mind, again, these are recorded, put on the YouTube channel from the research chair. So if you're a first timer, our prior 3 are there. Our topics vary greatly. And based upon Jason or I sharing our views, varies greatly as well. But we're trying to impart some of what we have learned and put into practice successfully over our years in the business. As Jason alluded to earlier, I'm about 30 years in. I've picked up a couple nuggets along the way, and largely 27. Because of the work I do.
Yeah, and me 27. So that's a good segue. We'll leave it open for questions, but we're going to put up a polling question. Michael and I are not cemented in place, have not cemented in place a topic for our next several from the research chair. So I'm going to put up a poll.
We want your feedback. What do you want to hear?
Yes, of course. And by the way, I will point out and pull the tails of our loyal attendees here. Many of you write us after the calls or after the podcasts and ask us questions. So we know that you're asking private questions, and maybe that's because you see us as silver bullets and you don't want to necessarily give away the quality of your question. All right, so here's the poll. which is, I would like for you guys to cover the following in your next From the Research Chair episode. Alpha wounds. Alpha wounds are things that firms engage in which are detrimental to their ability to create alpha. Some of those things are within the firm itself, not just in the research place, but in terms of distribution, for example. Most misunderstood investing topics is another, where we have a whole category of stuff. Skills that separate you as an investment manager. We've already done one in that category, which had to do with curiosity. But
We also did construction too. So maybe two we've already done that category to some extent.
Exactly. Fair point. And next is things like scaling, like how do you scale things properly? Next is context. How do you set context properly, which is a hugely important thing, or something else, in which case use the comment section.
Yeah, the point is, folks, these are broad topics. We've got lots of subtopics with each of these. So we just want to get some directional guidance from you of what you think will be valuable.
Oh, look at that.
I think we have a winner.
Yeah, you can see the poll results, I take it, Michael.
I can see the poll results so can they?
I'm gonna put it up there.
Oh, they should see the poll results.
You
folks have voted.
Should be right up there now.
That is strong. So we're going to talk about most misunderstood investing topics. Thank you for that feedback.
Absolutely, and thanks so much for all the people who voted. All right, so next segment, and then we'll segue out for this episode. Michael, what's something that irritates you that perhaps irritates nobody else? This is our fun part of it. This is the pet peeve section of our podcast.
I'm not going to use the classic, the wife leaves the cap off of the toothpaste regularly. All right, so I'm not going to go there. Where I am going to go is the top of the container that holds the Q-tips. For some reason, the top comes off, but can't ever seem to go back on. I don't know why.
That's still that's a derivation of the classic. For me,
it is. For some reason, I'm stuck with bathroom humor today. I don't know why.
Unknown. So for me, the thing that irritates me that maybe irritates nobody else, and this is true in places where we drive on the right side of the road. I see some Indian friends on there. Anybody who's been part of the Commonwealth, it's the opposite. So just factor that in, is that people can't take a left-hand turn well. They always turn too soon, and then they have to adjust. So they go, if you could see me, they go like this. They initially turn, and then they go straight, and then they turn again. And it's like, no, it can't be a 90-degree angle, but you have to go past the other lane of traffic and then turn left. And nobody ever does. I've seen two people ever in 2 decades that actually take a left turn well, and it drives me crazy.
This is clearly a high irritant to you, sir.
Not really, but it is a fun one, but it is something I notice every day.
Well, to all of you who've joined us today, thank you. We hope that you've taken at least 1 or 2 nuggets away from this. Again, recording is available if you want to review anything because maybe it went a little fast or you just want to take some additional notes. If you have questions, feel free to email us directly. We will respond. We're both on Twitter, and we look forward to seeing you again in 2 weeks to talk about some of the most misunderstood investment topics. That one's going to be fun.
Totally agree. Thanks, everyone.
Cheers.